All right, we got a bonus highlight. We got a highlight and we got a bonus highlight. And I think you guys, 5 minutes after the open, there was a kind of follow the leader. We brought in the Russell and the Dow. They were two of the stronger indexes in the first part of the session. NASDAQ was a bit weaker. And there was a little bit of a weakness here in the ES compared to the NASDAQ down here. A little bit. I'm sorry, strength in the ES compared to weakness in the NASDAQ, which means if you can get the NASDAQ to go up, if you recognize it, you should get a pop here in the ES. Always remember something. In order to be good at 10 points, you got to be good at 2 points, 4 points, 8 points. That's the progression. Everybody tries to get in this business and wants to make 10 handles on a trade, 20 handles on a trade because they see what the range is. They see what sometimes the move is. Their eyes are bigger than their stomach, right? So don't have that goal because it's too big. You gotta work yourself up to that. Now we go back to this ES. This is, like I said, about 5 minutes after 8:30 Central when we open, and you could see that it's pretty clear this market's got a consolidation box before the open and then right after the open. It's pretty clear that if they can get above a certain area, they can go to 32 and then maybe even beyond there. You got to get to 32 first. So while we're looking for location, if you're bullish, to open up a long position so that you can get it to pay you sooner rather than later. Minimal heat and get to pay you sooner rather than later, because you're always in a good position, in a very good position of strength if you're in the money, right? If the trade's working out sooner rather than later. So you could see that there's maybe some resistance at 32, but this market was waiting to pop if the NASDAQ would stop going down, because the Russell and the Dow, I'll bring those charts in a second, they were strong and they popped. So here's the NASDAQ, right? This is the weakness that you get in the NASDAQ. But in the first 5 minutes, you didn't get the same weakness in the ES. So this is a pretty good downside trajectory, right? Let me draw it better. This is a pretty good downside trajectory. And yet the ES was just pretty much going sideways, showing you more strength. In order to find strength and know its strength, you have to compare it to something. How many times do I use the joke, which really isn't a joke, that ugly people are important, because without ugly people, we wouldn't know what good-looking people were like. That's very important. You got to compare and contrast. So the NASDAQ is strong, and the NASDAQ is weak, and the ES is showing a little bit more strength. So when you get a moment where this market is going to get strong, when it gets strong, it's a better slap in the face right here. Look at the right side. This is predictable that the market could pop in the NASDAQ, and it was predictable. And we can say that this is a consolidation box. And I did say there's buy stops above 72.74, which means a breakout to the upside could be coming. And those are moments that you'll probably get the ES to make their run. Oh, shoot. Let me blow it up. The ES to make their run to the upside. And this isn't a coincidence that it jumps right there at the same time the NASDAQ jumps, right? And they peter out at 32. But if you can get a 4-point, 3-point rally and then you're wrong, at least you had money into the trade. At least you have time to get the hell out, because this eventually doesn't work. But the upside gives you a little bit of comfort, or a little bit of cushion is a better word, if you could time your locations better. So you could be wrong and make money, or wrong and not get killed. And the reason why this was potential resistance in here, you could have been long and get out here, was because of the speed at which it came down at around 8 o'clock this morning, and it threw out some resistance. Speed equals support or resistance. Got it? Speed equals support or resistance. Now, let me bring down the Russell. What did the Russell do? Take a look at this. It had already rallied through its box. It had already rallied through this area, all these rotation highs. So again, the Russell was strong and it was validating potential upside that the ES was just waiting to make. And then you get the Dow, the YM, same thing. It had jumped and it had, remember, I said we had buy stops above 20 in the Dow. And then sure enough, boom, we jumped through 20 and it's not a surprise. It's like a 30 tick, 40 tick rally almost in the Dow. You start to conflate, pull these things together, you strip out the randomness. It's not hard to watch 2, 3, 4 markets as long as you work on watching 2, then 3, and then you come to a room where you got more eyes and ears on people doing that, because this is only going to help you to find a better price, just like you're shopping for a car. Do you bring in a profile chart and a Fibonacci chart to negotiate price? The car salesman? How many times you've heard me say that? No, you don't. You go in there and you say the dealership down the street's cheaper. Or even better, if your cousin's a general manager, he tells you wait till tomorrow because we're getting a shipment of new cars, new inventory. That's order flow in trying to price a time for buying a car. New inventory is order flow. The dealership down the streets, compare contrast. Those are the two things that have been the two main concepts to value price since price was invented. Whenever price was invented, they used the compare contrast technique and some semblance of order flow, which is identifying buyers and sellers to dictate what's going to happen next. All right. So let's stay on this S&P chart. I'm going to show you the bonus highlight. And the bonus highlight, as long as you guys that watch this YouTube video subscribe, I'll show you a bonus highlight. Got to get over 1,000. We're close. We're knocking on the door. I think we're almost to 900. The highlight, though, we had a really, really interesting box that they just could not get below here, 30 or 22, or could not get above yesterday's close, which was around 37, 38 even. And they put in this consolidation box for a while. And not only that, they were throwing out a lot of volume in there. Remember about boxes, there's always the accurate assumption that there's open long and open short positions. So when there's a head fake or when there's a move like this, what I'm going to show you, it's important to understand what does it mean to look over your shoulder. If you want to read chart patterns and charts in real time, you've got to know why a chart pattern is looking like it does as it's looking like it does. Anybody could see a double top and a double bottom. All right. Ray Charles could see a double top. Now that's not funny. That could be offensive. You know, it's easy to offend people these days. And I often talk about people in the room, how I'm good at offending people and it's easier to offend people. And I still don't do it. I still scale back. I'm such a nice guy. But I have a cousin who lost his sight. So it's not a joke about Kenny. Kenny's back and he gets me going on this stuff. All right. So, anyhow, it's easy to see patterns in real time or see patterns after they've developed. But in real time is the skill. What do I mean by looking over your shoulder? You like how I brought you in the highlight video, Kenny? Guy hasn't been here in a couple months, and all of a sudden he gets his name mentioned. What do I mean by looking over your shoulder? Take a look at this bottom, these bottoms here, 22, 22, 22. Remember what I said? We were having a tough time getting through yesterday's close, which was like 37.5. And then it apparently was tough, having a tough time getting through these 22s. I didn't know back here that 22 is going to be hard to get down through, but you begin to make that understanding pretty clear when all these rotations. So at some point, they make a move through it. Okay. What do you have when this happens? When you have this happen, you start to shake out longs. How many? I don't know, but you start to shake out longs. And always remember this equation. When you have longs, you have sellers, right? I don't know about you, but when I'm long, I'm a seller. So is everybody. If you have less longs, guess what? You have less sellers. So when you shake out longs, which is what you do when you go down in price, you're going to have less sellers, less longs, less sellers. So what do I mean by looking over your shoulder? Well, this market, we don't know is going to stop in here. Well, actually, we didn't know it was going to stop in here. We had a chance that it was going to stop in here because there was a ton of longs that puked. But what I didn't know until it started doing it was at around 26, 27, 28, I said, be careful being bearish. Why? Because if it gets through the center of this consolidation box, it's going to start looking like a head fake and it's going to take out the top. Why? Because it just shook out longs, less sellers, less sellers. I don't care what the product is. If there's less sellers, it's easier to go up. And sure enough, this market starts to go up to the center of the previous consolidation box. And pretty much as soon as it crosses through the center of it, it goes up pretty quickly. It was like 28 right there. It goes like 28.30 was the center of this box in here. Bam, it goes up. This is the opportunity to transition yourself from bearish to bullish. This is the opportunity not to hold on to an idea that's probably wrong if you're bearish. This is the opportunity to maybe execute and look to play it from the long side if indeed you're bullish, right? These are patterns that are focused on other people's positions and when other people get shook out of those positions. That's what you have to keep an eye on. Forget about what you're thinking. Start worrying about what other people are thinking, because that's where the advantage of being predictive, that's where you're going to sharpen your predictive skills. So this market now is eyeing to take out this top, and then it ends up doing it. But it's easy to say that it did all this after it does it, right? But if you're able to make these assessments down in this circle, all of a sudden you're being correct and your prediction and going to feel like a good guess. This is the word you have to strip out in trading: randomness. All right. If you could strip out this word and you keep working on stripping out this word, then you're going to feel like you have a skill. And you know why? Because you do. Reading a chart, it's really important to understand the correct head patterns, why they're patterns, and how could you get better at recognizing them as they're developing. And then when they don't work, also sooner rather than later. So I'll obviously stop the suspense and show you how it ran through it. And then non-coincidentally, as you probably see a lot if you're in my room, is the top of here became the bottom here. And there was a good support inside this yellow circle. And then also with the puke tool that we have, what do you want to see when you get long? What do you want to see if this is a quiz? Do you want to see more longs or less longs? The answer is less longs. When you're long, you want to see less longs. Just like if you're in a bar and you're looking for girls and you want to see less guys or more guys, you want to see less guys, right? Less competition. I think I said that on an earlier video, right? Less competition. Same thing, vice versa. If you're a girl, if you're a woman looking for a guy, you want to see less girls, right? So that's important to understand, because a lot of people would get that. That's an easy answer, the bar example. This is a harder answer, and a lot of people would get this wrong. A lot of people would say, more longs. If I'm long, I want to see more people long. No, you don't. Too much competition. Remember what I said. If you're long, and if there's a lot of people long, then there's a lot of people selling the market. And if a lot of people are sellers and trying to sell, then it's hard to go up when there's a lot of sellers, and you end up having to squeeze them out, shake them out, and everything else. So I think I used a lot of my a lot of funny stuff this week. I don't want to be too funny, obviously, because we want to tame the subscriptions to YouTube. So have a little governor switch on them. We don't want to explode too fast. But get to subscribing to this channel so we get over 1,000. That allows me to do live videos. So stay safe. Have a good weekend. And understand patterns when they're developing. It's a waste of time to see them after they developed.